All right, Jason, module 2. We're going to jump into module 2 today, which is all about the fun stuff, all about the money, all about the money, all about the money. So we're going to be talking finances. We're going to be talking money. When it comes to purchasing real estate, when you're a real estate investor, how do you go about assessing your finances? What do we need to think about?
Yeah. So a few key things to keep in mind, as you're an aspiring real estate investor and wanting to jump in and do deals, is you've really got to take personal stock of your finances right now, of your financial health, so to speak.
Right.
So, and the truth be told, you can be at a variety of financial positions and do real estate. So just to be clear, we're not talking like rock star, everything, all your ducks in a row and a fantastic credit score, or anything like that. But what we are talking about is getting an accurate assessment of where you're at exactly right now. That's so important because there are several factors that are going to play into what you can do, what some of your strategies can be based on your current financial health. So, for instance, one thing I think everyone needs to keep in mind and understand, just getting a free, you can go to freecreditreport.com, I think is the website. There's several of them out there, but just find one of the ones where you can simply go get an accurate snapshot of where your credit score is right now. Mm-hmm. Once you know that score, you can then begin to strategize, okay, what are some of the things I need to do to position myself a little bit better as a real estate investor? So if you've got fantastic credit, congratulations. That's amazing. Continue to build on the principles and practices that you've utilized to maintain a good credit, a healthy credit, and a good credit score. If you don't, we're going to talk about some strategies here that you'll need to start implementing to start raising that credit score and to begin to get to be more attractive to potential investors, lenders that want to work with you.
Mm-hmm. And just to help people even dive a little bit deeper, when you got started, let's say your first couple deals or something, were you using, what was your situation, I guess, at that point? How did you kind of get started in the thing?
Yeah. So, and this goes to show, and we're going to teach throughout these modules, the different ways that you can use different funding sources. So for instance, the first deal that I did, I simply got a Discover personal loan. It was one of these offers that come in the mail.
Yeah.
And in my market, you can buy houses fairly cheap. And so I had good credit. It wasn't outstanding, but I had a good credit. I paid my bills and they extended a $35,000 personal loan. From that, I went and bought a house on an online auction, and that's how I began my real estate investing journey.
I love
that
it.
It was a fairly low interest rate, and it was a good way to jump in. So we'll talk about that as one of the strategies. But again, I had to before I started anything, before I even checked into that, I knew that I needed to assess and track where I was at financially, and starting with my credit score. And I did that. And that's when I explored, okay, with the credit score I've got, what are my options? And so with a decent credit score, you're going to be able to explore some options right out of the gate that, might be a little bit broader. And with a less than ideal credit score, you're going to need to work to get that up and explore some options that are going to fit your current situation right now.
Sounds right. It sounds good. And so, as you said, just to kind of put people's minds at ease, it doesn't matter if you have great credit or little to no credit. Like when I started, I had little to no credit, right? But no, it doesn't matter whether you have great credit or little to no credit. We're going to be teaching strategies. We're going to be teaching you. That's not a barrier. A lot of times I think and I know before I was in real estate, there was almost this mystery around finance, and especially real estate finance. Well, how do I do that? Well, how do maybe I understand how to buy my own home, but how do I purchase homes that aren't my own home, right? Rentals. Right. And how do I become a real estate investor? And I think there's a lot of just mystery for most people. In fact, I've met people that have been, have done several deals, and there still has a mystery around finance. So I think we're going to kind of debunk maybe some myths. We're also going to dive deep right into, doesn't matter where you're at, doesn't matter, again, if you have great credit, no credit, you have money to put down, or have all cash, or you have very little cash. There's strategies to use to make money in real estate and to build wealth in real estate, no matter where you're at, right?
Yeah, I agree. And you don't know what you don't know.
Right.
That's,
exactly.
No truer statement. So yeah, with that being said, let's just dive in. So as we've talked about, assessing your personal financial health, getting your credit report, or your credit report is the very first step. There's plenty of services that I mentioned to get a free credit report, signing up with a free service like Credit Karma, Credit Sesame. There's others out there that will allow you to monitor your credit health. Once once you know where you're at and you can get an accurate look at your credit report, you can then find out if there's any discrepancies or anything that you need to dispute. Those are simple things that you can do and get a credit bump simply by, correcting inaccuracies and things that are maybe no longer apply. So getting a look at that and then following the process. So for instance, if you're on Credit Karma, you can monitor your credit through there, and they'll give you tips and tricks and things on how to dispute any errors and how to begin to raise and bump your credit score. So it could be simple as, you can now use your utilities to a good history with your utility companies to raise your credit report. You obviously paying things on time consistently, month after month after month after month is the best way. But if you've got a knock on your credit, find out what it is and try to resolve it. If you've got delinquent debts, begin right now to work to knock those out. You can call your creditors and negotiate those. You can negotiate these debts down. Many people don't know that, and again, there's plenty of services. I mean, I could, credit repair agencies, if that's what you're needing. I've used Bureau Bully. He's a credit repair specialist in your local market, wherever you're at. There's bound to be a credit repair specialist. I would tell you, find out their track record. That's so important, because there is a significant amount of, how should she say, charlatans in this industry. There can be a lot of funny business. So really vet somebody that you're wanting to, if you're trying to repair your credit, vet them well, and you need to understand what exactly they're going to do. Don't pay anything up front, follow the testimonials. Ideally, you're going to be looking for somebody personally that's used them before. We'll have resources in our modules to, people that we've worked with closely, and we'll be able to refer out as well. So, but yeah, getting an accurate assessment and understanding how you can build and raise your credit score it's going to help you in so many ways. And in investing specifically, you're more bankable. You're more apt to draw more favorable rates and things, and the strategies that we're going to talk about in these funding. But again, it starts with a good, personal, accurate assessment of where you're at right now.
Then we'll just pause there. And then if you can't point your screen down a little bit more, I'm getting a lot of air over your head and not so much of you.
Yeah. Sorry about that.
No, that's okay. And I don't know why mine's super wide angle today. I don't know if I can, let me see if I can.
Yeah. I was off of a MacBook last time, and now I'm off of my.
Yeah. I just bring the monitor down.
Yeah. I'm trying, man.
Okay.
This is
there you go. A little bit more if you can.
I'm working it. So I don't have a traditional MacBook or anything or laptop. I've got those Surface Pros.
Oh yeah. Yep.
How's that? Is that better or more?
That's better. That's more of you. If you can give me more, give me more. I'm trying to get the ceiling out of the shot. See the ceiling in the back? I'm trying just to get the wall and not the ceiling, because the ceiling gives us this weird.
Yeah.
Yes. It makes your eye go up. And so if I can get the ceiling out of there, then we're focused on you. And that's a lot better. Just you're more in frame now.
Yeah.
Okay. Better? Let's start. Yep. We're going to start section 2. All right, here we go. So now we're going to talk about different funding sources.
Okay. And I specifically,
I'm
going to pull up my different funding sources. So we went through what types of funding is out there. Okay. I talked about bank funding, traditional funding, i.e. banks, private money, hard money, and joint ventures. Okay.
Ready
to go.
Well, good stuff in the last lesson, Jason, and kind of our kickoff to this module on finance. Now let's kind of dive a little bit deeper into what are the different, for different people with different credit and money down and all this, there's different ways to fund. So what are some different ways to fund deals or different funding sources for real estate investors?
Okay. So, first of all, the most obvious would be your cash. I mean, you've got cash in the bank, hard assets, liquid assets that you can use for investment purposes in real estate. So if you do, that's great. If you've got, $100,000 in the bank and you're wanting to deploy that into real estate, that obviously is one way to do it. We're going to teach a few different strategies on how you can best protect that nest egg and not necessarily invest in cash completely. Good debt is something that I teach a lot, and having opportunities to utilize some of these different funding sources is tremendous. And then you can stay, if you do have a strong cash position, you'll be able to stay in a strong cash position by not depleting your resources
Mhm.
on every deal. So, okay. So first of all, cash, that's obviously a very obvious one. Banks, traditional banks, lending from a local bank is, again, another great investing strategy or funding source. And so developing good relationships, and we're going to talk about this a lot, developing good relationships with small local lenders, I
Mhm.
think is huge. You're always going to want, at least primarily, you're going to want to explore the banking relationships that you already have. So if you've got a checking account, savings account with an existing bank, it's going to be fantastic to go talk to one of the lenders there. Find out where you stand, how bankable, quote unquote, bankable you are with that lending institution. I find it that it's primarily, you'll have better relationships, better rates, and an easier process by using small local banks
Mhm.
and credit unions that are close to you, and developing strong relationships with those institutions for traditional lending, I think, is by far the best thing. So make an appointment, go
Mhm.
talk to these lenders, talk to a mortgage broker, talk to find out who's giving, the best rates, find out you can actually, I believe the website is bankrate.com. You can actually
Right.
find out, who's got the best rates right now. Not all banks are created equal. I mean, they all have different underlying guidelines. So having conversations, and I tell you what, Matt, over and over again, people will think, well, I got shot down at that bank, I guess investing just wasn't for me.
Right.
Go and talk to more banks, interview
Mhm.
different lenders, because you may not be a fit for every lender, but you just need to keep looking and interviewing lenders, interviewing banks, and making appointments. That is absolute paramount and key to working with banks, is having lots of conversations and finding out if you're a good fit. And quite honestly, you're interviewing them
Mhm.
most times. And I know when I first got into real estate, and the first times I would sit down in front of a lender, I mean, I was so nervous, like,
Mhm.
that I hope they, I hope they fall for this. I hope
Right.
they,
Hope they
don't
like
see right
me.
through me. Yeah.
Right.
The truth is, you're hiring them.
Right.
You're
Well,
interviewing
and
them.
yeah, and because their job is to sell money, right? As a
100%.
loan officer, their whole job is to sell money. And I didn't get that for a long time too. I would say probably maybe I didn't even get it till maybe the last 5 or 6 years or 10 years. It was like, wait. I'm borrowing money, but their job's to sell it to me, right?
Yeah.
So it became a deal of, okay, who's actually got money for sale today? Because that means I'm going to get a better rate.
Yep.
And banks go through cycles where they're what they call loaned up, which means they don't have a lot of money to loan out, and then they have a lot of cash on hand, which means that they're going to be a little more aggressive, and that's going to depend. That's going to be seasonal. That's going to be bank to bank. That you're never going to know unless you're actually visiting with them. So I wholeheartedly agree with what you're saying on one, local banks. So when we're saying local banks, we're not saying the local Bank of America branch, and not that
No.
there's anything wrong with Bank of America, but for this type stuff, it needs to be like a family-owned bank in your area. So a few branches. And I find typically, not 100% blanket, but the smaller the bank, the easier they are to work with
Yep.
typically,
I
because
agree.
they're more human, right?
Mhm.
They're less institutional. Once you get into once it has to go to committee and you don't know who's on the committee, you're starting to lose track of human beings, right? Because now you're just a
Yeah.
number to them, and they don't know you. And so, yeah, definitely shifting kind of, as we talked in module one, shifting the mindset from being, thinking about being a real estate investor to being a real estate investor. This is kind of that same shift. Is a bank's whole job? That's how they make the bulk of their money. Isn't on checking deposits. They make the bulk of their money on selling the money to people like us, real
Mhm.
estate investors.
Mhm.
When you loan your car, your house, your boats, wherever they can make interest, their job is to make interest. So they make
Yeah.
no money. Because I used to look at it like you said, kind of nervous. I'd be nervous, and sometimes I'd even get mad. Like if a bank would say no, I'd be like mad. And it's like, it's not personal. It's just they have certain people that they lend to, certain groups that they like. Some banks like real estate, some banks don't.
Mhm.
Right?
Mhm.
Some banks like cars or commercial loans. And I think the other clarity is when you're talking to the bank, you're not talking to the teller. You're not talking to the person who loaned you the money for the car. You need a commercial loan officer, and
Yep.
not. And I would even say, especially when you're talking to a local bank, you're not talking to a mortgage officer. You're talking to a commercial loan
Commercial lender.
officer.
Yeah. Commercial
Yeah,
lender.
commercial lender, because a mortgage officer is going to loan you money on your home,
personal house.
on your house, a commercial banker is loaning you money for your business, and this is a business. Just for point of clarity from back in the to separate out who you're going to go talk to, right?
100%. And so, Matt, a couple things really a good takeaways again on this module are going to be developing these relationships, and you want to develop these relationships because you want your call returned.
Right.
As a new investor, oftentimes, we're got deer in the headlights, but if we can, get grounded in some of these good relationships, real estate's a relationship business. It always is. And if you can get grounded in good relationships and develop good local, like as you said, good local banks, smaller banks, small community, family-owned banks are going to primarily, by and large, be the best. If you can get, you can get your call returned, that's fantastic. You've got a relationship, have them take you out to lunch. I mean, all these little things go so far in lending practices with a private bank, or I'm sorry, with the institutional bank. We're going to talk about private lending in just a second, but get in, have these conversations, take them to lunch, have them take you to lunch, have these conversations. And there's just no substitute for that. And again, they're going to advise you on what you need to do financially to work with them. You're right.
Right.
Their job is to loan money out. Their job is to sell the money. They're going to advise you because they want you as a client. Again, these small local lending institutions, they're going to advise you, hey, what if a couple things here is what we're seeing. If we can get this, credit issue fixed, and if you're, you can get these deals underwritten well, and there's a good margins on this. Yeah, bring me good deals, and we're ready to go. We're going to talk again about some of the other lending institutions that we can use in our real estate business, but banking, traditional, small local banks and credit unions are one of the foundations. And again, we'll cover that again touch on it on some of our other strategies that we'll talk about.
Totally. And like you said, the easiest one is just to start with, especially if you have your checking account with a credit union or a small local lender, that's the best place to start because they already have an account. You already have money in it, there's versus going to make a completely new relationship. But if you don't, then you got to make those new relationships, right? You just got to go out and meet people, as they say.
And to close out this module, I would just really reiterate. If you get a cold shoulder the first time or the second time, you get a no, maybe we're not a good fit, keep going, keep interviewing lenders, keep talking to banks, everybody listening to these modules, you need to understand that you're doing yourself such a favor by just continuing through the process to push and find the right people to work with. And that includes lenders. So just keep pushing.
Totally. Okay. So that's banks, traditional banks or smaller banks, but then there's other funding sources. So what are those other funding sources for real estate deals, for real estate investment?
So one of the most efficient and effective funding strategy that I've used, and I use my business to this day, is private funding. So private lenders, as I said before, when I first got started, I used a personal loan. I used my own apparatus that I could, get a loan, and I purchased a house. But private funding, this is to me a game changer. And I think a lot of investors sleep on this a little bit and don't understand the intricacies, but we're going to demystify it. We're going to break it down. Private funding, it can come from a number of ways. And I can tell stories about the private lenders that I've utilized over my investing career and the ways that I've met them to blow your socks off. But it doesn't have to start with a rich uncle. I mean, that oftentimes what somebody might think is, mom or dad or a rich uncle is, got some money and like, hey, yeah, we'll loan on that. Or, you can, we'll partner with you or invest with you. That may be the case, but that's not traditionally the case. Some of the best private funding sources that I've utilized over my investing career, again, come through relationships. They come through relationships, and it may be a family member that sees potential in you, and that's fantastic. But oftentimes it'll come from, somebody you've known for a long time, and you don't, friends, acquaintances, coworkers. I mean, I've utilized private funding from, people that used to work for me in my painting business. I've utilized private funding from actually clients that I used to paint for. I've utilized private funding from, friends and family members, people from, civic organizations, and even, my kids' friends, parents, things like that. And here's the key approach. I read a book called Getting the Money by Susan Lassiter Lyons years ago, and it outlines specifically the best practices to raising private funds. And one thing you've got to really keep in mind is you are not going to beg people for money for your real estate. You're asking them, inviting them to be a potential investor as a partner with you. And if you reframe your thinking that way, that'll change everything. Again, you're not, going to somebody's like, hey, would you please maybe, pretty please loan me some money, because, I want to do some real estate stuff and I think I've got this really great deal. And wrong approach. You are, again, a real estate investor. I used to have this, I've mentioned this before, I used to have this peddler mindset, and then I had to understand and unlock the mogul mindset. So that mindset's going to tell you, hey, I'm looking for investors. I have opportunity to give you a better return on the money that you've got right now. It may be sitting in a savings account. Let's talk. I've got opportunities. I'm really picky about who I work with. And this is the approach that you have with people as you're considering utilizing private money for your real estate. You're going to want to vet them. Not everybody's a good fit. And the key point I'll take away is you're not acting desperate. You're not acting as though, everything's, you're putting it all on black and this is, hope this thing works out. No, you've got a well planned out, and these are throughout these modules that we're going to be teaching, you've got a well planned out, give people an opportunity to be partners with you, specifically funding partners with you, and you'll have a great return. And anyway, so that in a nutshell is private funding. The way to execute that is, most people understand you go to a bank, they give you a bunch of forms, you sign a bunch of documents, and, they handle the process. But when we utilize private funds, we're executing two documents. We're giving them a mortgage on the property. So they are the note holder on the property, and that attaches and is recorded with the county that the deal is done in. And we're giving them a promissory note. The terms are up to you. I will say this, there's best practices in negotiating terms. The best thing you can do is ask people like, well, what kind of return are you getting right now? Because as a new investor, sometimes we think like, well, I don't know how much you want to charge me for this money you're going to give me. And that's the wrong framework. I mean, they could start with, well, how about 20%? Wow, that sounds great. Terrible. You want to ask them again, as you're operating from a boss real estate investor mindset, what kind of terms are going to suit you, and we'll find out if we're a good fit. So generally speaking, I mean, if you can get a private money and again, execute that mortgage and a promissory note, and you want to keep them very up to date on, the whole process. But if you can execute terms anywhere from, 6 to 10% is fantastic, up to 15% is generally pretty good, especially for a new investor. Many new investors may start with 15% and maybe 3 points or something like that. But again, private money investing is a fantastic way to get in initially, because here's one of the main qualifiers that a private lender is going to utilize. They just want to know that there's meat on the bone. They want to know that that's a good deal, that you've got it under contract, you've got a good game plan, and we're going to talk about scope of work. We're going to talk about executing your game plan on your investment strategy. But that lender just wants to know, is my money safe in this deal? And if you can check those boxes, and we're going to share some resources in our modules. We've got what's called a deal sheet, and we're going to share that resource. That's a fantastic sheet that you can share with the lender to adequately and succinctly explain what this deal is, and give them the warm fuzzies that they need to know that their money's safe and that they're betting on the right person to bring this project across the finish line. But some good takeaways there in private lending.
Totally. And like you said, later in the modules, we're going to go over, and as Jason said, an actual sheet, right, that you could present them that kind of shows them, hey, here's where here's where it's under contract, here's what it's going to take to fix it. And really a lot of that private money, this is mostly for flipping, right? The private money, most of the stuff we're talking about here is for flipping and potentially probably long-term.
Burst strategy is perfect. Yeah, we're going to talk about that as well.
but this isn't really, you don't need this for a wholesale strategy.
No.
No, this or any of the banking here, but as you look at the different ways you might want to become a real estate investor or are a real estate investor, it's just good to have this knowledge in general. But definitely, yes, before you go out and say, hey, right, there's certain steps. You're going to have the house under contract. Then you have the deal structure that you've already kind of structured. Then you take it to the lender. You don't go to the lender. I would not suggest going to a person, a private lender first and saying, hey, would you invest in a real estate deal if I decide to do a real estate deal? That's not the way it works, right?
No.
But because there's nothing there for them to do. So it's no different than if they came to you and said, hey, would you do this deal? And you're like, well, I need to know what the numbers, I need to know the time frame. I need to know what what the market value. There's a lot of factors that go in. So I would definitely not necessarily queue up anybody in that space until you have a deal, right?
Yep,
Because
100%.
there's right 100%, right?